Fred Martin, why does Benjamin Graham continue to be relevant to investors?
Benjamin Graham is relevant to investors because he has timeless principles that if you follow them, you will be successful as an investor. The principles which he published in his first book in 1932, Security Analysis, did 4 editions, and wrote a second set of books starting in the late 40s, Intelligent Investor, which Warren Buffett says is the best investment book ever written. Those principles are timeless. So every investor should read at least The Intelligent Investor.
And in your book, you point out there were some loss strategies, and you highlight those loss strategies in your book. What are they, and why'd you share them? You should have kept them for yourself and gotten richer.
No, we should not have done that, and we're following in the tradition of Graham and Buffett, which is tell the world what you're doing. And what we do is very difficult to execute, but it's the right way to invest. So what we refer to in the loss strategies is Benjamin Graham. There are 2 parts to it. One is Benjamin Graham was secretly a growth stock guy. He made more money on his investment in Geico, which was a growth company, than he did in all of the value trading strategies, value stock trading strategies that he did. Second, he published in his 1962 edition a valuation methodology for valuing growth companies. That mysteriously disappeared from future editions of Security Analysis. And in fact, we were asked to write the book by McGraw-Hill because they were intrigued. We had to send them a copy of the chapter of the 62 edition of Benjamin Graham that detailed how to value growth companies. So they were intrigued that a money manager was actually using something from 1962.
All right, well, using Ben Graham's strategies, what stocks do you like now? Any favorites you're seeing using maybe some of those loss strategies?
I'm going to talk about at least one and a couple more if you'd like. As an example, would be a GPS company called Garmin, which is a wonderful company. It's right in our wheelhouse. They are very strong in P&Ds, which are called personal nav devices, little handheld devices. That business has matured and is slowing. They're very strong in aviation, in marine and outdoor. They have a tremendous balance sheet. They have world-class management. And it's just a wonderful company. We think that is just a great long-term company.
All right, how about another Ben Graham stock?
Another one would be off a similar technology, GPS, called Trimble. And Trimble is very strong in the construction business and the ag markets. And I want to add something, and that is what we're looking for is companies that have a above average growth rate, a defensible business model. And I should point out that we own stocks for years and years and years. Okay, we bought Trimble, I think, 7 years ago.
And when Warren Buffett eventually retires, who will carry on Ben Graham's legacy in your opinion? Other than you guys, you manage money that way, you're writing the book, but any other notable money managers out there that will carry on his words?
I'm not very good at looking at other managers, but I would profile, what I would say is the person that will emerge is the one that is able to use valuation stock methodologies to buy growth companies. We think that will be the next transition in the whole. We believe Buffett and Graham, their philosophies evolved over time. They weren't static. Warren Buffett's not a static investor. So the next generation, the next superstar will be one that marries valuation stock techniques with buying growth companies.
This market is
stock pickers market.
Stocks have rallied this year.
We're coming into a Monday where we're going to